Hello guys, welcome back, Brock Pips again, and in today's video, in today's class, I will show you how some of pairs went about some pips in the previous week, but also this week. But before talking about those pair, I will do some recap on my previous video where I talked about the market structure, but it was in the Swahili language. So some of my viewers, some of my subscribers requested that they want me to make the English version of that video. So in this video, we will talk first about the market structure issues, and then we will jump in the breakdown analysis. So stay with me from the beginning to the end of this video. When we talk about market structure, we mean that we have only three market structures, which is the bullish market structure, bearish market structure, but also we have range market structure, which some of people called it sideways market structure or consolidation market structure. But for me, I will talk about only two market structure, which is bullish and bearish market structure. So when we're talking about the bullish market structure, the bullish market structure is made by two things. The first one is that the bullish market structure trends, bullish market structure trends upward, but also it made up with a series of higher highs and higher lows. I know that everyone now understands about this thing. So by structure, bullish market structure is look like this: high high, high low, high high, high low, high high, high low, high high, high low, high high. What you have to understand is that in the bullish market structure, where you find higher high is where you have to put your break of market structure. So I don't know what type of break do you use, maybe week to week breakout or week to body breakout or body to body breakout, depends on you. But where you see higher low is where you put your transition or change of character, right? Chochi. And in order for us to say this market still is bullish, we have to make sure that the market continues to create the series of higher highs and higher lows over and over. I mean that the market has to close above the previous higher high and form new high, again close above the previous higher high and form new high, again close above the previous higher high and form new high. But when the market did that, we have to make sure that the market has to respect this previous higher lows. I mean that we don't have to see the market close below this, because if the market will close below this, it means this market will now try to change, maybe to go to the downtrend, maybe can be the downtrend, or the market wants to be in the ranging. So we have to know that if we see this kind of break here, it means that the market now started to change from the bullish either to ranging market or bearish market. So in order for us to say this structure still is bullish, we have to make sure the market creates the higher highs and lows, higher highs and higher lows over and over and over and over without breaking these lows. But when we're talking about bearish, it's like vice versa. Bearish market structure is that it created by first it is trending down. That's why some of people call it downtrend. But also it's made up with the series of lower lows and lower highs. So by structure is that this market trend like this: lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So in the market, in this bearish market structure, is that where you see the lower low is where you have to put your break of market structure. But where you see the lower high is where you expect to put the transition if occurs. I mean that in order for us to say this market is still bearish, we have to make sure the market breaks the previous lower lows and form new lows. But also, if the market breaks these previous lower lows and form new lows, the market has to respect this previous lower highs. It has to break this, but also respect this one. Because if the market will come and break again up, it means this is the new sign for us to say that the market maybe now wants to be the uptrend or the bullish market structure or the ranging. So if you see the market just cross below above this level here, it means this market failed to respect this lower high, and now the market can be either bullish or ranging market. And if you see that sign, it means that market is no longer bearish. So that is the bullish and bearish market structure. But another thing that I would like to talk about here is about this term that we call transition. Transition. For me, I call it transition, but many of you may know it as the change of character, like that. So what is transition? How the transition occur? The transition occurs when the market, maybe we were in the bullish market structure like this. So we say that we have to break this high here in order for us to say we are still in the bullish trend, but also we have to respect this low here. So if the market will come and close below this low here, here is where we find our transition, because the market has failed to respect that previously higher low. So here is where I mark my transition. But maybe we were in the downtrend and we are expecting to break the previous lower low and form new low like this. But we have to respect, we have to respect this this previous lower high. So if the market will come and close above this previous lower high, it means the market didn't respect that previously lower high. And that is where our transition from the bearish to bullish occurs. So transition the bullish to bearish occurs like this, but bullish to bearish to bullish occurs like this. So in this video, I will talk about how do we mark this transition, but maybe in the next video, inshallah, I will talk about it. For now, I would like to show you how this transition looks. So let me show you some example of transition. Let me show you about some example of transition. Like maybe here we have transition. You see we had this higher high, higher low, higher high, higher low, and then this is the break of market structure. But also this is where we have to put our major transition. You know, some people don't understand about major structures and minor structures. They still don't understand about that concept. I have video on this concept on this channel, so make sure you check it in order for you to understand the major and minor structures. So example of transition, for here we have maybe I will mark this one. Let me mark this one. Let me mark this. This is the transition. Also we have this transition here. We also have this transition here. As you can see here, the market was trending up, higher high, higher low, higher high, and then the market closed below. So this is the transition. But also in this level here, you can see that we had higher high, higher low, higher high, and then the market just came and breaks below. So we have the transition here. So I'll talk in details in the swing point session. But also we have this transition here. As you can see, the market also changes the character from this point here. But also we have this transition here. Here. As you can see, the market just went up, high, low, high. The market didn't break again to this level. We expected the market to break above this level, but the market didn't break above that level. So the market just came down and broke this previous higher low. So the market also gave us the transition this level. But also in this low here, what I can see here is that I have my transition from this point. This point here, this is my transition, because what you can see here is that yes, this was the low, and as you can see, this low was already broken. As you can see, this low was already broken. So after this low being broken by these two candles, as you can see, this was the low also broken, but this low was not yet broken. As you can see, if you measure clearly, you can see it was not yet broken. So we can mark this as the break of market structure in the downtrend, but also this is the transition, because the market failed to respect this previous lower high. So that is how transition happens. So another thing I would like to talk is about phases of market structures. In the phases of market structure is that we have three phases of market structure, which is we have impasse, but also we have correction, but also we have continuation. So when we talk about these phases, how do they apply in our market structures? Is that nani nakuja. How do they apply? Is that let's say we have this trend like this. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then the market just changes the character. So you see this structure. This is where the transition occurs. This is where the transition occurs. This move that came from this point and breaks this low here and give us this transition. This move, this is what we call impasse. And the move that is collecting itself to come to take some liquidities that are remaining inside this level, this move, this is what we call correction. And the move that continues after taking some of liquidities within this level, this is what we call continuation. And then correction, continuation, correction, continuation, correction, continuation, and then transition again. Then correction, continuation, correction, continuation. So what you may maybe notice right now is that the impasse occurs only when transition occurs. Like you see, this is the impasse because the transition occurs like this. But also this is the impasse because the transition occurs here. So impasse occurs when the transition happens. But these two are repeated in itself. You know, my English is not good, but try to understand. I know you understand. So those are the phases of market structure. The last thing that I will talk about that is very, very important, it's all about swing points. So in the swing point session, you have to understand swing pointing if you want to know where the market is coming from and where the market is going. So, for instance, let's say when we talk about swing points, we have only two swing points, which is swing high, but also we have swing low. So in the swing high and swing low, these are the swing points that we have. And when we talk about the swing point, we mean at the very, very highest point or the lowest point that are found within the market structure. For instance, let's say we have this higher high. This is the swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, and then swing low, because the market also changes the character or transition, and then swing high, swing low, swing high, swing low, swing high, swing low, and then transition, then swing high again, swing low, swing high, swing low, swing high. So when we are talking about swing points, this is what I mean. This is the swing point, the highest point in this market structure. Let's say this is the maybe daily time frame. This is the swing high, swing low, swing high, swing low, swing high, swing low, and blah blah. And also we have this downtrend. And this, let's say this is the 4 hours time frame. This was the daily. Let's say it's just an example. So this is the 4 hours time frame. This is the swing low, swing high, swing low, swing high, swing low, swing high, swing low. You see? But this is just the standard or the easiest structure that I can show you in order for you to understand the swing points. But the market is not sexy like this. It has not been sexy like this. The market, you can find the market looks like this. Let me try to draw. Yeah, complicated structure. Maybe like this. Then here, then like this. Maybe this will be the complicated structure. So let's try to draw it, and maybe here, and then like this. Yes, like this. Okay, maybe you can find the market is look like this. So in this level, in this example, you have to understand that we have two swing points, which is swing high and swing low. But we have the major swing, but also we have the minor swing. You have to understand that also. What do I mean is that if this is the 4 hours, let's say this is the 1 hour time frame, you will see the structure like this. But when you go to the daily time frame, maybe you can find something like this. High, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. Here, swing high, swing low, swing high, swing low, swing high, swing low. This is what you will find maybe in the daily time frame. So black one is the 1 hour time frame. I'm sorry for the background noise. But the following, the red one is the daily market structure. So why do I want to show you this? Is that I want you to understand that in every trend there is a trend. This is the daily trend. The red one is the daily trend, but the black one is the 1 hour trend. So what you find in the 1 hour time frame is that you have a trend again. You have the bullish trend first, downtrend, bullish, downtrend, bullish, downtrend, bullish, downtrend. These are the trends that are found within the daily, within the 1 hour trend. But if you go to the daily time frame, you can just see that, only that. But when you go down to the 1 hour, you will see the market structure like that. like this. So after knowing that this is your market structure, you have to understand which are the major and the minor swing points. For instance, the major swing point that you will also see on the daily time frame is this one. Swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, low, swing high, swing low. This is not a swing low because this doesn't break to that level. The market didn't break to that level. So still, this is not the swing low. Unless you mark maybe the minor one, the minor structure only. But in the measure, this is the swing low, swing high, swing low, swing high, swing low, swing high. So these are the main swing point that you have to know that this swing point, you may find them also in the daily time frame. But in the 1 hour time frame, we have another swing points which are not major. They are minors, like this one. Swing high, swing high, swing high, low, low, high, low, high, low, high, low, high, low, high, low, high, low, then high, low, 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 high, low. So these are the minor swing points. These are the minor swing points. So after knowing that you have the major swing point, but also you have the minor swing point, now you can understand what shifty or what transition you have to trade. For instance, if the market gives you the structure like this, it means this is the break of market structure, but this is the transition. But this transition is the minor transition. Minor transition. But this one is the major transition. Why? Because when you see, what you see here is that this was the major swing high and this is the major swing low. So this is the minor swing high, minor swing low. So if the market breaks this low, it means this will be the minor transition. And this, if the market breaks this low, it means this is the major transition. You see? So you have to understand that, because sometimes you can see the market just only breaks this transition here and left you with this inside formation. Maybe there's some inside formation inside this level here. Maybe sometimes you can react to that level and go down. But also, if the market will break this low here and left you with some liquidities, you can just come also and take these liquidities and goes down. Why do I show you this? Is that some people, when they see this is the where they put, maybe this is where the break of market structure found, and they know that the transition has to come to happen at this level here. Sometimes those people failed to take some trades after this. They may fail to take some trades after this transition here because they want to see the market close below this one. But what you have to understand is that sometimes price may close this transition because this was also the break of market structure, but minor, right? This was the break of market structure also, and this is the break of market structure also. So if you know this is the break of market structure and this is the break of market structure, if the market closed below this but failed to close below this major, you can trade these liquidities that are found inside this level, because this is also the transition. But if the market also closed the major, it will give you more advantage for taking the liquidities inside this level, because if you can just investigate yourself that if the market breaks this low and then breaks this low, the market tends to come and collect some liquidity with this level and then goes down. You can just maybe try to investigate that if this works. It's not 100% works, but many times it works many times. For instance, I can show you the example in this level here. You can see here, this was the transition, minor transition. This was the major transition. Why I said this is the major transition? That's because you see, this was the swing high, major, swing low, major, swing high, minor, swing low, minor. So this was the break of market structure, but also this was the break of market structure. So the market failed, first time failed the market to break this transition here, minor transition. But the market also, after the market breaks both of this transition, but also this transition. So the market did like this, did something like this, and left you with this sum of liquidities inside this level. So if you see that scenario, it means the market will come to correct some liquidities within this level and goes down. And this is what the market did, as you can see. After breaking this and this one, the market just came and took some liquidities that were found inside these levels and then moves down. So that was about liquidity market structure. So let's jump in the sum of breakdown analysis. I'll start with the AUUSD. In the AUUSD, we have the intraday trades. We have the intraday trades like here. As you can see, the market closed above this daily. This was the daily break of market structure. This was the daily break of market structure. So after this daily break of market structure, we know that we have this area as our area of consideration or area of liquidity. So we don't have inside formation in this level, so we can just go back to the 1 hour to see what we can find inside that level there. So what you can see is that the market left us with this inside formation here. This was our inside formation. So we just mark that inside formation and then go down again. To see if we can find something inside this level, inside or liquidity engineering or inside formation. So we don't see anything. When we go back to 3 minutes, let's see. When we go back to 3 minutes, you can see, let me go to the 1 minute maybe, you can see anything. Yep, we have this one. We have this formation down here. If this is this one, this is the formation that has not yet taken. Okay, see down here, it's like the market tapped this one, but this one is not yet tapped. So we can just mark that as our entry point, and let's go back to the daily, to the 1 hour time frame. So what we can see, or what we know, is that the market has to come to take this entry. This is the aggressive entry. So the market has to come and take that entry. So we put our entry that level, take a profit at that level. Our stop loss will be, let's put 10 or 15 pips, whatever. What you can see, the market just came down. Activate our entry like that. And then also activated our take profit. that was AUUSD buy, but also we have the usdcad, and in the usdcad we have also the same entry as the AUUSD. As you can see here, we have this minor break of market, minor BOS, this one. So we know that this, from this level here to this level here, this will be our area of liquidity, right? So you can just cut from this level and see what you can find inside that level. So when you go back to the daily time frame, to the 1 hour, sorry, to find what is inside this level, that you can see that we have only this inside information which is not yet taken, so you can just mark it right here and here, and then go back down to the 15 minutes to see if we can maybe deal with it, or we can find another liquidity down here. So on the 15 minutes we don't see anything, but when you go back to 3 minutes, you can see the 3 minutes that we have this kind of inside formation that is found down here. You can see there is the bullish candle, so it means the market, let me show you in the line chart. As you can see, this is the inside formation, this. So we have that inside formation which was not yet taken, so we can put our entry from that point. And let's go back to the lower, to the daily, to the 1 hour time frame, to see if the market will come to that level. So that is where we will put our entry, and our stop loss will be at, let's see, I'll put our entry from this point here, and the stops, let's put it 10 or 15, whatever, and I'll take profit at the turning point there. So let's see how the price reacted. The market just came, activated our entry, but also activate our take profit. So that is how AUUSD also went. That is how AUUSD or AUDCAD, sorry, went. But also we have EUROCAD, which this entry took me out. But we have 2 entries here. As you can see here, we are this break of market structure at this level. So why the high have to mark this one? This is one of my entry type, so I won't talk about it a bit in details. So this was the level that I know that the market will come, and reacted to that level. So we just have to mark this candle and then go back down to the 1 hour to refine it. As I told you, I won't talk about it in details. So when you go back to the 15 minutes to the 5 minutes time frame, you can see that we have, I think it was the 15 minutes if I'm not mistaken. Yes, it was clearly in the 15 minutes, this one. We also had that candle. I will show you. This is the candle that I'm talking about. Only this candle, this red candle. But also in the daily time frame, we have the same candle. You can see this only candle. Buy, but this is the one that sells. In the 15 minutes, you can see also you have buy this candle. So I will put my entry from that point and wait for the market to come. So what the market did is that the market just came and activate my entry. Let me show you, like that. But after that, after taking my first entry, the market also breaks the structure at that level. After breaking that structure, when we go down to the 1 hour, we can see that this was our area of liquidity, and this is our inside formation that we found inside this level. So we can refine it in order for us to find if there is any liquidity inside this level. But some people may use this as the liquidity engineering type 4. They can use it, but for me, I don't like to use it until I see maybe there is no any liquidity inside this week. Then I will use this as my entry. So what I want to do is that I want to go back down. I wanted to go down to see if I can find any liquidity which is not yet taken. And what I find is that I had this. Let me see in the 1 minute. Let me see in the 1 minute what we can find inside that level. We don't have nothing. We don't have anything inside that level. So we can just go back to the this is where I put my entry. This is where I put my entry, and my stop loss was only 15 pips. And if you go to the 1 hour time frame, you can see that also this was the aggressive entry. So I put my entry at this level here, and I put my stops at the 15 pips. 15 pips, it's here, and I expected that the market will come to activate my entry and goes up. Let me try to speed the process. You can see the market just went up, and then came down, and then activate my entry, but also took me out and then moves. As you can see, for the first time, the market just activated my entry at this level and gives me about 40 pips. But also the second time, just the market came and took me out, and my first take profit was hit. This was my first take profit was hit, but the market took me out first and then goes in my way. So that is how CAD took me out. But also we have another trade, which was the USD CAD. In the USD CAD, we have this trade here, which was from the weekly but also the daily. And this is the same scenario that I taught you about in the last couple of minutes. Is that you can see we had this transition here, but also we have this transition here. So if we have this kind of scenario, the market tends to come and collect some liquidities within this level and then goes down. So after knowing that, I saw the market just tried to approach that level. So I tried to refine this level here. And when I go back to the 1 minute, I found that we have this inside formation, which was not yet taken, I think. So I just marked it and then go back to the 15 minutes. In the 15 minutes, I found that we have another inside formation up here, which is already taken but not 50%. So we can just mark it. And then let's go back to the 5 minutes time frame. In the 5 minutes time frame, you can see we have this inside formation here, which is not yet taken, and the stop loss was how many? So we can risk about 15 pips from that point. So that will be my entry. And when you go back to the daily time frame, because when you go back to you can refer yourself, if you go back down, there is nothing there. Still, you will find that liquidity still is the one that you have to take. So I waited for my entry to be activated at that level, and the market failed to activate that level at the first, but I refined this level because I saw the market just approaches to that level. That's why I refined that level to see if the market will come to that entry there. So what you can see is that the market just tried to come, but it didn't. The market took a long time to come, but you can see the market finally activates our entry. So after activating our entry, as you can see now here, we were having this break of market structure here, this break of market structure here, this break of market structure here, and this was the area of liquidity, right? This was the area of liquidity, this one. So the market just came inside this area of liquidity. You can see, sorry, I marked it alone. Okay, this was our area of liquidity. As you can see, the market just came inside this level and reacted. So after reacting, if you go back to the 1 minute, you can see that the market changes the character. The market changes the character here, and after changing the character, we have this inside formation, but also this inside formation. So when you go back to the 15 minutes, we want to take this what we call the type 1 entry. You can see in the 1 hour, that inside that formation that we found inside the 1 hour, we have this another inside formation which was not yet taken. So I put the entry from that point, and when you go back to the 1 hour, you can see we found the inside formation inside this inside formation, which was not yet taken. And the market just came and activated that entry for the first time and also the second time, and the market went up like that. So that is how this USD CAD and all those pair was. So this was the entry type 1. But another example is GBPUSD, which is the last one. In the GBPUSD, I would like to talk about this series, the buy from this point here. As you can see, this was the daily break of market structure, but also this was the minor level, the daily level. We were expecting the market to come and react to that level and give us some either aggressive entry or confirmation entry. But what you can see here, we have, after the market reacting to that level first time, the market give us the change of characters, the inside formation. As you can see here, this was the this is not this one. This was the change of character, and this is the inside formation. So I mark this inside formation and then go back down the 15 minutes to see if I can find another liquidity down there. And I saw that this is already consumed, this is already consumed, but this one is not yet consumed. So I put my entry from that point, and I posted this entry on my Instagram account. So I think you saw it. As you can see, the market just came and activate my first take profit, but didn't activate my second take profit. And also the market just came down and then reacted to the same level the second time, but the market didn't give us the change of characters, the inside formation. Thank you for watching. Wish you a good week.